The markets are open. This is Squawk Real Time.
Just taking a look to see whether we've had a print on Vodafone yet. I'm really excited about this because it is an enormous deal if it happens. It's an enormous deal for the brokers, the bankers, the investment community, enormous deal for the European telecom sector as well, which is entering a very low, it seems, hard, grinding phase where it's not getting the growth opportunities it hoped it would get from expansion globally as well. Add to that the fact that we've got concern again over the US housing market, over those pending home sales yesterday, which were pretty disappointing. But add to that the fact the bigger story, which is an overlay over every investment decision, it seems, if I read the copy correctly, and that is concern about the macroeconomic fundamentals associated with the Middle East once again. It seems we're really taking more of a shudder about events in Syria than perhaps we did in some greater oil producers. I've now seen more than one broker, including SocGen, I think UBS as well, talking about a potential $150 a barrel. Well, Syria doesn't produce anywhere near the kind of oil that would affect that. So what they're talking about is a domino effect, and ramifications of an Iraq being affected by this as well, which SocGen's Michael Wittner talking about 500,000 to 2 million barrels a day being affected by this. Then we do potentially have an issue. But the market seems pretty well supplied, and it's 90 million barrels a day that it is using. But that said, that apparently is the reason why ExxonMobil rallied yesterday, why Chevron rallied, why the energy sector was up 1.8%, but there was a bit of relief elsewhere amongst other sectors. Around about 53% of stocks in the US yesterday were on the positive tilt. That aside, we're up everywhere. Looking at the media sector, it's pretty underwhelming, and yet WPP shares, they've had a very good run-up. Let's not forget that. They've had a very good run-up, outpacing the FTSE gains by about 4 to 1, I think, over last year. They're not really doing too much so far today. I've seen them up, I've seen them down, WPP, I've seen them unchanged. They're unchanged at 11.78 at the moment. So people are looking at the figures and looking at what Sir Martin Sorrell had to say and taking it, well, in a cautious way at the moment. If you'll recall, we reminded the viewers that in these figures, the first quarter had come in at 2.1% growth in like-for-like. The second quarter had come in much higher than that, giving us an average for the first half of 2.4%. And more recently, July was up over 5%. That's quite interesting, especially when the operating margin, which is a key metric that Sir Martin Sorrell pointed out to us, was also very positive as well. But the market's just saying, OK, we've bought this stock on this story and the hope to recovery, and maybe a little bit of M&A angle as well, of course, with the massive Publicis Omnicom deal as well, and are now just taking a pretty tempered view so far today on the numbers. They're now up 0.5%. Oil and gas, which was the outperformer by a country mile in the United States yesterday, again, trading flat at the moment, just trying to pick out some of the biggest names in the sector. OMV 1.2% higher up as we speak. BG down 0.4%. BP, which has got continuation of Macondo issues, failing to cap those potential litigious issues there. BP currently trading at 452 pence, spot 45. Media's just moved up a fraction as well. That aside, we've got some really, really decent-sized gainers. Basic Resources, you won't need me reminding you of how volatile this sector can be, being led higher by the likes of Anglo-American, up 0.5%, Bulletin up 0.7%. Let's take a look at this Vodafone story again. Might be anyone who's excited about this one as well? I think there's other people in the newsroom more interested in other stories out there, but I'm going to stick with this one because I really have always loved talking about Vodafone. I don't care if you think I'm boring. 189.30 was where the last print was as well. As Chris was saying earlier, really struggled to match some of those higher valuations that people were talking about, getting it as high as 220, 230, possibly as high as 250. Market cap at that value is 142 billion US dollars. You can add to that as well a significant amount of debt, but nowhere near as big as some of its rivals. And this is the key. When they bought all their acquisitions many years ago, they used shares. They didn't use debt primarily as well. Now they've finally admitted what many people have been talking about for a long, long time, and that is that they're in discussions with Verizon Communications about the sale of Vodafone US, which is, for all intents and purposes, Verizon Wireless, and a 45% stake in that Communications doesn't own as well. It could be enormous for you shareholders in terms of an extra return, but it could also mean, if you don't get enough of a cash element, and this is the key, you could end up with a lump of communications and not wireless. Don't forget that a lot of this is going to be done in cash, some of it's going to be done in shares as well. So if you end up with Vodafone getting too big a chunk of Verizon Communications, then you become a minority shareholder in the parent company with less control over the dividend stream there as well. So does that give you the bonanza that some of you would have hoped for? You're already getting a right fat divvy on Vodafone. You may not be getting the share price appreciation. They haven't moved too much over the last year, but you do get a divvy in the region of 5.5 to 5.7% yield.